Excellencies, ladies and gentlemen, welcome to Vienna for the 159th meeting of the OPEC conference. I should like to extend a special welcome to three ministers who have been appointed since our meeting in December and who are therefore attending the OPEC conference for the first time as heads of their country's delegations. They are His Excellency Abdul Karim Roebi Bahede, who is Minister of Oil of Iraq. His Excellency Dr. Mohammed Al-Busari, who is Minister of Oil and the Estates Minister of National Assembly Affairs of Kuwait. And His Excellency Dr. Mohammed bin Saleh Al-Sada, who is the Minister of Energy and Industry of Qatar. At the same time, let us extend a welcome to His Excellency Engineer Guni Musa Sheikh, Nigeria Governor for OPEC, who is leading his country's delegation to our meeting. We look forward to their wise counsel in our discussion. Let me take this opportunity also to record the organization's appreciation to their predecessor and wish them very success and happiness in the future. His Excellency Dr. Hossein Al-Shahristani for Iraq. His Excellency Sheikh Ahmed Al-Abdullah Al-Ahmad Al-Sabah for Kuwait. And His Excellency Abdullah bin Hamid Al-Atiyah for Qatar. Today, we shall look at developments in the international oil market since our last meeting in Quito on 11th December. This period has been marked by high levels of volatility and an upward trend in prices. On several occasions in April 2011, the price of the OPEC reference basket topped $120 a barrel. Then early May saw a reverse, with the sharpest weekly price decline of record, as both WTI and Brent lost almost $17 a barrel. However, while prices have slipped back from their earlier peaks, they are still well above what we saw at our meeting in Ecuador 6 months ago. But the story goes deeper than this. When we look at currency movement and inflation, the OPEC reference basket rose by only 16%, while in nominal terms, the basket has risen by 24% since the start of the year. The early onset on winter had an initial impact on the situation. So did forecast of a quick than expected rise in oil demand and a surge of investment flow in commodity markets, including crude. However, the market outlook has been dominated more recently by the political developments in the Middle East and North Africa. There has also been triple disaster in Japan. Our sympathies go to those affected by all these tragic events, and we look forward to their early solutions. there is still much uncertainty about the strength of the world economic recovery, while the developing economies continue to be the main drivers of growth. Particularly China and India, there are still some notable points of concern. These include the persistently high level of unemployment, the soaring death cases in major OECD countries. OECD countries' potential overheating in many emerging economies and rising inflation across the globe. There are all important factors. They can interact with each other and they can all influence the return to steady economic growth. In short, it has been a nervous 6 months for the oil market. Throughout, however, fundamentals have remained sound. Very much due to OPEC's efforts, the world remains well supplied with oil, with ample spare capacity and adequate stock levels. However, it appears that there is not enough effective spare capacity in the downstream sector, which has recently led a further spread of sweet and sour crudes. Despite that shortage generally, the basics are right for market stability. Therefore, when we seek to gain a deeper insight into the recent volatility, our attention turns to the financial sector. Since our last meeting, speculative activity on the NYMEX has reached record highs. We saw, for example, open interest for NYMEX WTI exceed 1.1 million futures contract by mid-March. This was an astonishing 18 times higher than the volume of daily traded physical crude. Excessive speculation in the futures market increases volatility unrelated to fundamentals and efforts by governing and regulatory bodies in the consuming countries to minimize such speculation remains imperative. Let me repeat once again OPEC's long-standing message. Oil market stability is the responsibility of all parties, producers and consumers alike. We all benefit from stability, and so we must all contribute to it. OPEC play its part to the full by ensuring that there is always enough oil to fuel the world economy and support growth. Other stockholders must cooperate with us in achieving lasting stability, for which the world community at large will benefit. Excellencies, ladies and gentlemen, it's clear from this opening remark that there is much to talk about as we examine the market outlook for the coming months and beyond and take the decisions we deem necessary. And so, let us now proceed with the meeting. Thank you for your attention.